Hello. Today you are with the March-April edition of the SE News. We report on economic, construction, real estate trends in all major countries in Central and Southeast Europe. Today you are with our news on Romania, and we start with the news on the retail asset class. With 17 new brands entering the Romanian market in 2022 and the opening of 11 new retail parks, the total stock of retail projects came close to 4.1 million square meters. With scheduled retail deliveries of around 260,000 square meters across Romania this year may turn out to have the heaviest pipeline calendar since 2011, which would add to the existing stock of more than 4.1 million square meters, according to the real estate consultancy Colliers. This year, the biggest single delivery will be Nepi Rock Castle's Promenada Mall Craiova, which will have a leasable area of around 64,000 square meters. Meanwhile, the development of retail parks will continue in smaller cities due to the higher flexibility of these projects, especially on the tenant mix. Other types of schemes are also gathering steam, with strip malls and smaller convenience centers quite attractive, says Liana Dimitru, their director retail agency at Colliers. Meanwhile, Romania's retail market remains undersupplied compared to other countries in Central and Eastern Europe. For a similar consumption level in terms of volume to Czech Republic and Poland, Romania's modern retail stock per capita is 2 times smaller than the Czech market and more than 40% behind Poland's sector, according to Colliers data. New projects consist of 20,000 square meters were completed in Q4 2022, while the total retail stock across Romania reached 5.1 million square meters at the end of 2022. Shopping centers had a share of 56% of the total stock, while 38% were in retail parks and 6% in commercial galleries. With a share of 70 up to 80% of the total building stock, the retail sector in Romania has the biggest number of projects that have received the green certifications, followed by the industrial and office projects, according to the real estate consultancy Colliers. In the industrial segment, the share of buildings with green certifications hovers around 60 to 65%, while the office segment, there are over 59% of green certified buildings. Colliers consultants suggested that the demand is likely to fall in the coming years for property projects that fail to align with the sustainability targets of tenants. With a somewhat young real estate scene, for instance, around half of Bucharest's modern office stock was delivered in the last 10 years, it should come as no surprise that many commercial buildings are green certified, some with very good scores even at a European level, said Ioana Stamatin, ESG Chief Officer at Colliers in CSEE and Romania. The agency's consultants further point out that in the retail sector, most certifications are BREEAM in use, while for industrial and the bulk of certifications are BREEAM. For the office stock delivered since 2017 in Bucharest, the major certifications are LEED and BREEAM. We move on to the news on the residential asset class in Romania. Is the Romanian residential construction market cooling down? This question is quite often asked both by those looking to buy a home and by those building homes. The former are hoping for prices to come down, while the latter are worried that prices will come down, whereas a definite answer cannot be given. Despite a rocky start, real estate sales in 2022 were comparable to those in 2021. And so, at least from this point of view, the market seems to be relatively stable and could tip either way. In a regional view, the northern half of the country was more likely to see a drop in transactions, and Bucharest remains the most active market, with 1 in 5 real estate sales registered in Romania. Looking at the longer-term trends, the number of sales in 2022 were 29% higher than those in 2019, but still below the peaks of 2015. This is minus 21%, and 2008 minus 31%, and thus it would seem like we're approaching another turning point in the market cycle. From a house price perspective, there are some signals that asking prices started to go down. However, as of Q3 2022, this didn't translate in a decrease in official transaction prices. Instead, prices kept rising, albeit their growth rate has somewhat slowed down. While no data is available, the share of newly built homes have been purchased as an investment asset rather than to be lived in by the owner. Most home purchasers are looking for a place to live, and for them, affordability is a very important factor. A useful estimation is that of comparing average prices to the average income. While in 2007, the average monthly wage could buy you 0.20 square meters in an average size 2-room flat, this steadily grew to around 0.50 square meters in 2020. However, it declined to 0.45 square meters in 2022, making homes slightly less affordable for the average worker. To add to this, rising interest rates for mortgage loans make it even harder to buy a home. In 2022, there were 8 hikes to the National Bank's reference interest rate that climbed to 6.75% in December, up from 2% in January 2022. This translated into a near doubling of interest rates for new housing loans, and they will remain high as long as the National Bank keeps reference rates. As inflation subsides, cheaper loans might be on the horizon with a positive impact on demand for residential real estate for both housing and investment purposes. Furthermore, on the residential asset class, Romania has one of the lowest volumes of housing loans as a share of GDP, being, for instance, 6 times lower than that of Poland in absolute terms, according to a study published by Romanian developer STC partners. Furthermore, Romania is one of the few countries where housing loans have increased as a share of GDP since 2010 at a steady rate, which shows that the mortgage market is underdeveloped. Housing loans as a share of GDP hit an all-time high in 2022, close to 9%, but the growth of loans has been smooth in the last decade, noting unlike the times preceding the housing bubble of 2008, when housing loans balance grew by more than 50% every year in the preceding years of the crisis. A growth slowdown was already observed in 2022 versus 2021, which is expected to continue in 2023, according to the report. Data from the European Mortgage Federation shows that housing loans in Germany have a share of 49% from the country's GDP, similar to France. Spain has a share of 40%, while among C countries, Czech Republic has the biggest share of 26% of housing loans in the GDP. Asking prices of homes in Romania rose by 6% year-over-year to €1,682 per square meter during the 2022, while the number of property deals slightly grew last, and the demand in the residential segment has started to fall, according to a report by real estate Classifield's platform Immobiliare.ro. Last year, Cluj-Napoca was the most expensive residential prices, has the most expensive residential prices, with prices going up with 40% year-over-year to €2,410 per square meter. In Bucharest, home prices rose by an average of 5% to 1,704 euro per square meter. In Brasov, prices were up 11%, while in Timișoara, the asking price for a home rose on average by 6% to 1,454 euro per square meter. In Constanța, the home prices grew by only 2% to 1,431 euro per square meter. In 2022, the number of potential home buyers stood at 370,000 compared to 419,000 in the previous year. Meanwhile, property transactions in the country totaled 640,000 deals during 2022 compared to 624,000 in 2021. Prices of new homes in Romania will fall this year in 2023 due to lower demand as loan conditions have tightened, but more people will be looking to rent instead, and this is leading to an increase of prices this year, according to an analysis by the real estate consultancy GLL Romania. At the end of 2022, rents for new apartments increased by an average of 8.5% over a 12-month period, while old apartments increased by 6.1% over the same period. Rent growth was more pronounced for large apartments, 3-4 rooms, in the new market, while rent for small units, 1-2 rooms, was up for the old stock. This trend can be explained by the decrease in the supply of large rental apartments, as in recent years the preferred products for small investors were small apartments which are bought into the rental market after purchase. Once rental rise, they are likely to remain at this level, added GLL's experts. Development and the mortgage market have a major impact on the residential market. Most likely house prices will continue to fall slightly over the next half year in the context. However, we expect prices to gradually return to previous levels over the medium term as the credit market rebalances, said Andrei Hamza, Senior Director Living at GLL Romania. The agency's experts suggested that Romania's rent movements are pointing to development of the PRS niche. The potential development of residential for rent, PRS, in Bucharest could reach 5,000 units by 2025, according to real estate consultancy Colliers Romania. The increasing interest of Romanians to rent homes is generated by the decreasing affordability of purchasing homes, especially the ones from the new stock. This is due to increasing financing costs for bank loans. In Romania, key interest rate has already reached 7%. Meanwhile, residential sales in January 2023 were down across major cities except Bucharest. Colliers experts estimate that there are 20% fewer transactions compared to the beginning of last year, and the rise in interest rates will result in a considerable slowdown for home sales. Next, we move on to the news on the office asset class in Romania. The average office fit-out costs in Romania rose by around 20 to 30% in 2022 due to a combination of supply chain pressures and higher materials costs, which saw companies paying an average of 820 euro per square meter of office space, according to real estate consultancy Cushman & Wakefield Equinox. The budgets can range from 600 euro to over 1,200 euro per square meter, depending on the project complexity, the materials and the solutions used, but also on the technical and security systems which have been implemented. The costs related to fit-out works, architecture installations 50%, and those pertaining to furniture 30% have the highest shares in the total cost, while also being the most impacted ones by the price increases. Nonetheless, fit-out costs in Romania remain among the lowest in the Central and Eastern Europe, and the outlook is positive. Companies are looking to upgrade their office spaces in a bid to accommodate the flexible work models with a greater focus on collaborative and green spaces. Last year, deliveries of offices totaled 124,500 square meters, while this year new projects with a leasable area of around 104,000 square meters will be completed. Demand was driven by the IT sector, which had a share of more than 25% of the office leasing market. Next came the professional service sector, 12%, and the financial banking sector, almost 9%. In Bucharest, prime rents for offices were flat at 19 euro per square meter per month, with further gains expected in the first part of this year due to the inflation indexation. The modern office stock in regional Romanian cities is set to reach around 1.3 million square meters in the next 5 years, if the planned projects spanning 275,000 square meters will be delivered in this period. At the end of 2022, Cluj-Napoca remained the highest regional office hub with a stock of 340,000 square meters, followed by Timișoara, Iași, and Brașov. Iași and Cluj-Napoca will benefit from the highest new supply of office spaces in the coming years, 164,000 square meters and 75,000 square meters respectively, while projects with total leasable area of 16,000 and 21,000 square meters are expected in Timișoara and Brașov. Transactions of new office rental, relocation and pre-rental in Romania's regional cities reached over 70,000 square meters in 2022, which was 20% more than in 2021. Almost 90% of the lease deals were closed in cities that university centers such as Iași, Cluj-Napoca, and Timișoara, according to a report by 14 trusted advisors. Iași was the city that attracted the newest tenants in 2022 after Budapest. In total, large companies have rented and pre-rented office space with a total of over 26,000 square meters, which represents 37% of the total rentals outside Bucharest. In Bucharest, total office leasing activity stood at 200 and close to 215,000 square meters in 2022. Demand for new offices in Bucharest rose by 13% in 2022 compared to the previous year, with over 332,000 square meters of spaces leased in the city during the past year, according to real estate consultancy 14 trusted advisors. The largest deal saw Booking lease 9,000 square meters in the first phase of U Center, while BAT pre-leased over 10,000 square meters in One Cotruțeni Park. The ITC generated the biggest demand in the office market, with over 125,000 square meters being leased through new transactions or negotiations. At present, Bucharest's office stock totals 4 million square meters, with new deliveries reaching 131,000 square meters in 2022. While around 100,000 square meters of new office space is expected in Bucharest in 2023. No new projects are slated for delivery in 2024, which would move the city into a landlord's office market, according to Colliers. However, Bucharest's office market is undersupplied on a per capita basis relative to Western European capitals. Even lower supply rates are recorded in regional cities. In 2022, new office deliveries in Bucharest total 124,000 square meters, while the total stock reached nearly 3.3 million square meters by the end of Q4 2022. And lastly, some trends on the flexible working in Romania and the office asset class. 3 out of 4 decision makers in large companies with more than 500 employees expect low office presence in 2023, below 30% compared to 2 out of 4 respondents from SMEs. This creates an interesting sub-trend, as larger companies may want to create multiple office spots in the same space, which allows them to have greater cost efficiency and flexibility depending on the number of employees working from the office. This means rethinking the office to be more than just a workspace, but more space that supports collaboration and team spirit, accelerates creativity, and attracts and retains talent. In October 2020, around 53% of companies were offering their employees 1 to 2 remote working days per week, while employers are now talking about 3 to 4 remote working days. Only 4% of respondents to the Collier survey asked their employees to work permanently from the office. The survey further shows that 21% of respondents considering remote working to have a negative impact on workforce productivity compared to 40% who consider it to be an improvement. The same data shows that SMEs have found it more difficult to ensure remote work productivity, with 4% of companies with less than 500 employees saying an increase in efficiency compared to 43% of large companies. These were our news, March-April 2023 news on Romania. Check also our news on the other SE countries such as Bulgaria, Poland, Hungary, Czechia, Slovakia, Serbia, Croatia. You can find them on our website cnews.eu as well as on our YouTube channel of PropTech Bulgaria. See you soon.